Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the market. So, Bitcoin is breaking down ahead of the busy week that we've got. Over on Wednesday, in 48 hours, we have the next FOMC meeting. So, I want to talk about right now what is happening for Bitcoin. Is the S&P 500 breakdown next? What are my thoughts on the FOMC meeting on Wednesday and the next FOMC? We're going to be talking about economic data, what the Fed futures are currently predicting for the interest rates, Bitcoin on-chain metrics, Bitcoin price action, all of that and more. Let's dive right into the content. So, as you know, Wednesday is the most important day. We've got the FOMC, but I want to let you know what we've got leading up to the FOMC, which will affect the Fed's decision. Now, on Monday, we do have the PMI index. We also have a US 2-year government bond auction. I'm going to be talking about that a little bit later on in today's video because this one is very important in my opinion. Coming into Tuesday, we've got the US consumer confidence. We are also going to be kicking off some housing data with the US housing price index. This is very overextended right now. I think we're kind of seeing the same tapering top that we saw in the 2008 crisis. Maybe I'll talk about that in another video. Coming into Wednesday, yes, we are going to be starting off with US new home sales, which is predicted to show some weakening in the housing market at this moment in time. But of course, the most important one is going to be Wednesday's FOMC decision. Now, all of the economic data that I just mentioned up until this point, this is going to be baked into the FOMC meeting. So by the time we have the FOMC meeting, the Fed is already going to have reviewed all of this data that I just went through with you, and at which point they're going to be making their decision on the interest rates. This interest rate decision, unlike others, is going to be one of the most important ones that we've seen in the past few years or so. Of course, up until now, they've been hiking, and recently they paused the interest rates, which is leading the market to kind of be a little bit confused. I'm seeing 50% of traders saying, oh, they're finally getting ready to cut the interest rates. I'm seeing 50% of traders saying, oh, they're going to, continue raising the interest rates. I am on the fence that they are going to continue raising the interest rates. You can actually see if we do come over to the target rate probabilities, there's a 99.8% chance that they are going to be raising the interest rates again. If we come over to the Fed futures market, Fed futures are currently around about 5.4%, predicting a further interest rate hike in the immediate short term. Also, if you're looking at, Bloomberg economic data, looking at the Fed dot plot. The Fed dot plot is also predicting that we should be witnessing further interest rate hikes. And if you do keep up with Fed commentary, a lot of the Fed members themselves have been saying, one pause was necessary, but we do need to continue tightening financial conditions, raising the interest rates. If you're a veteran of the channel, you'll already know why I think we're going to see a further 2 interest rate hikes. If you're new to the channel or you don't watch all of my videos, then the reason you don't know why I think we're going to raise the interest rates at least 2 more times is because you wouldn't have watched this video, Inflation Bottoms in June. Now, over in this video, I'm going to go through this very quickly. This is the US CPI index, not on a year-over-year basis. This is how year-over-year changes in inflation are calculated. Now, for the past year, from the June 2022 reading, from the June 2023 reading, you can see inflation has been up 3%. The reason why it's been decreasing year-over-year is because we've been measuring from this absolute parabola. However, in this video, I stated for the next 6 months, inflation readings are going to be from a flat baseline. We're no longer going to be measuring year-over-year inflation from a parabolic uptrend. We're going to be measuring year-over-year inflation from a flat basis for the next 6 months. And as you can see, looking at the index, month-over-month inflation has been increasing every single month without fail. So if we just take a basic trajectory of, the path that we're currently on for inflation, by December of 2023, we could have a year-over-year inflation reading back up to 6%. And this is what I highlighted in this video. This is a really brief summary of all the economic data that I went through in that video. But nonetheless, I think inflation year over year is going to be coming back up to 6%. I think that's going to pressure the Fed to raise the interest rates further. And I think that's why the markets right now, especially the bond market, which we're going to talk about now, is starting to price in higher interest rates. Now, before we talk about Bitcoin, like I said, one of the most important pieces of economic data that I'm going to be looking at this week, of course, Wednesday is the most important. We know the FOMC. On Tuesday, though, we do have the US 2-year government bond auction. Now, if we do look at the pieces of data that have been coming in for the 2-year note auction, you can basically see the 2-year treasury notes have been going absolutely parabolic. And if we're looking at the previous data point in the US 2-year government bond note auction, you can see we hit an all-time high back here in February of 2023, and we came back up to this all-time high in terms of the US 2-year note auction. This almost hit a new all-time high on the 26th of the 6th, which caused for a new all-time high to happen the week after, following the 3rd of July in the next month. So basically, the previous piece of data that we had from the 2-year note auction last month caused a new all-time high in the 2-year government bonds. This caused a further deep inversion of the yield curve. Basically, the bond market right now, I believe, is looking at the same data as myself in the year-over-year inflation. If you didn't know, the bond market is very, very sensitive to inflation. It's very, very sensitive to the interest rate. So I think the bond market right now is currently pricing in the fact that we are going to be measuring inflation for the next 6 months from a flat data point. And because of this, I think the next reading that we're going to have on Tuesday is going to signify that the 2-year government bonds are going to start increasing again. I think we're going to see the price of the 2-year government bonds further push down to the downside, which is going to cause the yield of the government bonds to further increase to the upside. But that's the economic data. Those are my thoughts on the markets. I think the FOMC meeting on Wednesday is going to have a 25 basis point increase. I think the next FOMC meeting after that, coming on the 20th of September in 2023, is further going to see another 25 basis point increase. Now, let's dive into what is happening in the markets because of this. So starting off the week with what is happening in Bitcoin, you can see Bitcoin is down about 3% today. We're going to talk about the technical analysis in just 1 second. I want to let you know what's happening on chain first. Now, for the past few days, since the 21st of July, you can actually see the Bitcoin open interest is decreasing to the downside. This is, basically signaling the interest and volume that's happening right now in the derivatives market. So this implies that, the futures for Bitcoin are heading down in terms of volume. This implies that perpetual swaps are heading down in terms of volume. Typically, sometimes the Bitcoin open interest can be a leading indicator. A lot of the time, this can top out and bottom out, and the price action will follow. You can basically see for the past few days, if we do zoom in, okay, that just absolutely ruined it. Let me zoom in again. You can see for the past few days, since the 21st, we have been seeing Bitcoin open interest start to decrease to the downside as the derivatives market really sits on the sidelines and starts to exit some of their volume from the market. The Bitcoin price has been diverging from this for the past few days, and now as the open interest further decreases, this is why we're seeing a weakening in the price of Bitcoin as it does follow. If we do now come over to the number of active addresses, you can see very, very active right now. We've got 900,000 active addresses acting as senders and receivers in the network. This is one chart that we haven't looked at in a very, very long time. This is called the Bitcoin new addresses chart, or as I like to call it, the Bitcoin retail FOMO chart. Why do I like to call it the Bitcoin retail FOMO chart? Well, number one, this does correlate with tops in the price action. In fact, if I just overlay some vertical bars, because I know some of you who have been on the channel for, maybe 10 months, a year or so, you would have seen this, but this hasn't actually been something that I've covered in at least 6 months or so. Now, what you can see here is typically as the retail FOMO chart starts to top out, the Bitcoin price action tends to top out at the same time. Why do I call it the retail FOMO chart? Well, if we come over to the Bitcoin ratio of retail to institutional addresses, if you look at the peaks, the 11th of December 2017, if you look at this peak, the 28th of December 2020, if you look at this peak, the 3rd of July 2023, this correlates to tops in the Bitcoin ratio of retail to institutional addresses, signifying that when the Bitcoin new addresses top out, this is a lot of the time associated with retail FOMO. Coming into Monday as well, we're seeing a good amount of volume coming into the markets, and we're also seeing a lot of Bitcoin inflows happening at this moment in time. This typically always happens ahead of the FOMC. People send their Bitcoin to exchanges, getting ready to liquidate in the event that they don't like the outcome of the FOMC. So we're seeing inflows take place ahead of the FOMC. We're seeing open interest decrease ahead of the FOMC. We're seeing, the Bitcoin retail FOMO chart top out, and we're seeing whale wallets sit on the sidelines and almost break down into new bear market lows. So this is what's happening on chain. Now, this is what I think is going to be happening in terms of the price action. Now, I want to show you a fractal which we have not looked at before. We've looked at the fractal taking place with the bearish flips on the MACD. I want to talk about the bullish flips that actually happen on the weekly MACD for Bitcoin. Now, on this chart, we're just going to be looking at the bullish flips that happen on the MACD in a bear market, because the MACD acts very, very different whether you're in a bull market or a bear market. For example, if you have a bullish flip on the MACD and you're in a bull market, like we can see over here, there was a bullish flip where we moved into the green. This was bull market territory. We also saw another bull flip over here on the MACD. When you're in a bull market, a bullish flip on the MACD signifies that you've just completed an oversold phase and you're getting ready to push back up to the upside. However, A bullish flip on the MACD in a bear market actually means something completely different. Over here, you can see a bearish flip, which happened over on the MACD in a bear market. You broke all the way to the downside, and then you had a dead cat bounce back up to the upside. Now, after completing this dead cat bounce, the weekly MACD, acting as a lagging indicator, flipped bullish. And this wasn't saying, hey, the MACD is flipping bullish on the weekly time frame, we're now ready for a new bull market. This was actually saying we kind of just completed a massive dead cat bounce on Bitcoin. We're still in a bear market, so the weekly MACD heading to the upside is actually a sign that we're now overbought. So you can see MACD flip bullish on the weekly time frame over here. We were still in a bear market. This signified the exact top, and then we broke back down to the downside, and this bullish MACD flip soon became a bearish MACD flip, which we've highlighted with this red vertical line over on the chart here. Now, you can actually see there was an instance over here where we had a bullish MACD flip. This just continued being a bullish MACD flip. We haven't seen another bearish MACD flip happen since all the way over here. What you could actually see in this instance is a classic case of regular bullish divergence where the price action was continuing to break to the downside, and in terms of the oscillator, you can see this was making higher lows. So over on the weekly MACD, you saw a classic case of bullish divergence over here, which is why we didn't see that bearish flip on this fractal. Over here, you did see a bearish flip on the MACD. However, what happened after then? Well, we saw some news which broke the MACD in this instance. We did have a bearish MACD flip. We started to break to the downside. What happened right here? Well, this is when a bunch of institutions started filing for Bitcoin ETFs. The price snapped to the upside. The Fed came out and then said the ETFs were inadequate, and that's why we've been breaking to the downside. So right here, what I want to highlight is a potential fractal which could be taking place the same as this dead cat bounce, which topped out round about 47,500 for Bitcoin. However, at this time, we could be topping out at 31,900. Now you can see the bullish MACD flip here, boom. On the week of the MACD flip, you topped out in terms of the price action, the exact same as over here. And right now, if we zoom into the MACD, it's looking like we are 1 week away. Potentially, it might happen this week. If not, it looks like we're setting up for a bearish MACD flip in the following week. And what is this going to correlate to? This is going to correlate to a further interest rate hike. This could absolutely plummet Bitcoin to the downside. If we do load up the FOMC and CPI dates, let's get rid of the FOMC minutes, let's get rid of the CPI, and let's come over to the daily time frame. And as you can see, the last few times we have had these CPI dates, Bitcoin has broken to the downside. The only reason why we started rallying back up to 32,000 is because of all of this hope of the ETFs being accepted. They weren't accepted, they were called inadequate, and that's why we're seeing a break back down to the downside right now. So I think the same thing that's going to take place with the previous FOMCs is once again going to take place in this instance. I think we're getting ready for another interest rate hike. I don't think the markets are going to like that, and I think we could repeat this same fractal over on the weekly time frame where we've already had the bullish MACD flip. Over here, the market's topped out. We saw a bullish MACD flip over here, the market's topped out, and now we're getting ready for that bearish MACD flip to carry us back down to new bear market lows, just like it did in this instance over here. At which point, I pretty much think the Bitcoin bear market is over. So following that, in terms of what is also happening over in the cryptocurrency markets, once again, like we've been saying, Bitcoin has been getting rejected underneath this orange box that we've been detailing on the channel. In terms of the macro price targets, I've got my eyes on the bull market support bands at 28,500. Then if we get rid of the bull market support bands, weekly EMA ribbons coming in at 27,700. If we get rid of those, one of the most important ones is going to be this retest of the 200-week moving average at 27,200. The last time we bounced on this, we kind of had an SFP. We kind of failed to break above the previous high, hold it as support and break up. We've pretty much just double topped right now, and this could end up being a very, very nasty end pattern. I'm gonna have to talk about this as it develops. Let's take things one price target at a time. Let's take things one event at a time. We want to keep our eyes on the FOMC for now. If we start breaking down following the FOMC, if we get another interest rate hike, we can start talking about this end pattern and talking about it in a little bit more detail in future videos. In terms of the total cryptocurrency market cap, like I've been saying, it's very, very boring right now. My thoughts haven't changed. We're still in the same head and shoulders. If we come over to the total altcoin market, we are retesting the 200-week moving average right now. You can see we've just rejected from the long-term moving averages of the weekly EMA ribbons. We're sitting at a very crucial level of support on the bull market support bands and the 200-week moving average. Right now, I think following the FOMC, if we do get another interest rate hike, these markets could get ready for an absolute nuke to the downside. So what is happening in the lower time frames and what should you keep your eyes on in the immediate short term? Well, you know my price targets in the higher time frames. You know that I think we're going to break down following the FOMC. You know what I think is going to happen in the FOMC. So in the immediate short term, I want to once again reference this tight range that we had literally been trading in for about 33, 34 days. We're finally breaking to the downside of it. I did post this over on my Twitter, letting my Twitter followers know that Bitcoin was closing multiple daily candle bodies beneath this bar pattern top. If you do want to follow me over on Twitter for extra posts while I'm not making YouTube videos, it is here at 618_cowboy. But you can see we were closing multiple daily candles underneath the neckline of this bar pattern. We had an SFP back up to the resistance. If we clear everything which is going on here, you can really see what is developing. We were in a bull flag. We broke up to the upside. We were in the flag. We were in the flag. We broke down to the downside. And yesterday we pumped back up to resistance. We retested it. And now we're nuking ahead of the FOMC. So what is the price target in the immediate short term? Once again, we've been in this range for a very, very long time right now. We should now keep our eyes on the breakdown target on the 4-hour time frame. This is this bearish pennant right here with a price target down at 28,200. I think we're going to be there reasonably soon, maybe on the day of the FOMC or the day after the FOMC. And once again, this has been a boring tight range we've been trapped in for quite some time right now. I think as we're finally breaking down from this range, I think this bar pattern is solidifying. As you can see, we're closing beneath the spiky top here. So this is indicative that we're about to start rushing to the downside. This is how these bar patterns work. As quick as you come up to the upside, once you start breaking down, you break down just as quick. So I really think within the next week or two, we could potentially be back down at this bar pattern all the way down at the neckline, 24,750. So that's really all I've got for today. Those are my thoughts on the markets. Those are my thoughts on the FOMC. I will keep you up to date. I will come back on Wednesday following the FOMC meeting, update the markets and let you know what is happening right now. But I think Bitcoin is a good sign of global liquidity. And I think as global liquidity is trending down, as we've been discussing in these videos, Bitcoin is disregarding global liquidity. The markets are disregarding global liquidity. There's no real S&P 500 update today because a couple of days ago, we did quite a few S&P 500 updates. My thoughts haven't changed. I think global liquidity is trending down. Bitcoin is making that move first. I think the S&P 500 will make that second move as it does get ready to break down to the downside after the FOMC meeting. So for today, my friends, that is all I've got. If you do enjoy the content, as always, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Make sure to follow me over on Twitter for some extra posts, charts, memes, economic data, which I do not post over on my YouTube at 618_cowboy. See you in the next one, my friends. It's been your boy Cowboy Trades. I'm out. Peace.